Livestream. It's Friday. How did everyone's week go? Are we green? Are we red? Are we break even? Thanks, Vidal. Appreciate the confirmation. Anybody take trades today? So, bunch of things to talk about today nonetheless. Alice got 2R, nice. 1R in eval, or minus 1R in eval. That's great. You know, actually, that is one of those points. You just reminded me of something I want to talk about later, which is about risk management. And I like what you did there. 2R on the main, pack it up, move on to the evals. Beautiful. Kazar, what's up? Yes, I take it in gold. Perfect. I know gold was halted recently due to some technical issues, and then I think it's you're not able to trade it on specific prop firms. I can't remember which ones, but funny enough, I don't even have an account with MFFU, and I think they might be one of them, but not sure. Vidal passed the 50K rapid this week. Amazing. Had some emotional decisions from Wednesday to now, and in the red there. Use the fivers. Cool. Yeah, me too. I got one of those as well. Minus 1R in the eval. Slippage candle. Slippage candles are the worst, man. They are the worst. MES. Was that yesterday? I think that was yesterday, right? If I'm not mistaken. Oh, before yesterday. Okay, cool. Tandem, what's up? Good to know I'm not the only one that started a red streak from Wednesday. Yeah, you know, it's tricky, I think, from a psychological or mindset perspective when you start with a loss and how you react, because it can impact us, right? And start making us feel a bit of FOMO or even panic. It feels almost like, oh my God, I don't have a win or something like that, right? I gotta turn this around. Everyone's different. We're all going to have different ways that we combat that, right? There's no real right or wrong answer in how that works, too. I think everybody has a different way of doing it. Vidal says that IB from MES that wicked out before running higher. That was tough for me personally. Yeah, it looks like a lot of people got wicked out on that. So, Tandem says I was up almost 3K for the week and then went on a losing streak Wednesday. So my question to you is, how many trades do you allow yourself to take in a day on let's say on a funded account or on any account, I guess, one per day? Good risk management. One win, one loss. Okay, cool. Yeah, we're going to talk about that a little bit too. We're going to talk about risk management and some ways to, just some ideas to think about. So first off, I guess what I'll talk about is, I mentioned Unicorn University. I'm quite active inside both Discords, the AshCap public Discord as well as the UU premium side. I would say that in the premium side, one of the big things that I do differently than say in the public side is. I'll show you guys, is just, so I used to have my own little personal thread, and I used to share everything I was doing in there, and, I'd be posting all day long in there. Basically anything that was in my mind or anything I was seeing on the chart, I would just dump it into my personal thread. So if you see kind of here, personal threads, right? Like people have personal threads here. And at some point, I think when I got given an opportunity to, just provide more to the Discord itself. We closed it off, and I just literally started posting inside of NQ, inside of like the trading floor. So these are more of the general side chats. So I literally live inside of this NQ chat. I'm not sure, how many people are lurking around in there. I'm assuming there could be a lot. But I do trade with another guy in here who's quite active with me. His name is Iman. You've probably seen him in the chats, seen him in the Discord, general chat as well. But we literally trade NQ for the entire morning, all day long. Sharing ideas, sharing. Now, keep in mind, we both do trade the same model. We both trade IFEGs and whatnot. But the reason I'm bringing it up is just I literally dump everything that is in my head, like while price action is moving throughout the day. So like, let me give you an example of what I mean. And, it could sometimes it's just me posting all day long, but that's okay. Because if someone is learning from it, then or using it to help them, then, I mean, that's all that matters. So let's start from, I guess, that first trade I took today, which was the data candle setup. And, I mean, the first thing I posted about this morning was just about London session, right? And seeing what was there. Was watching the data candle setup, right? And I was like, wow, there's a 79 points, data high. Iman sharing some ideas. We're looking at the gap size. This is where I literally live when I trade during the day. And I post things randomly inside of the public side. But anyways, point of the story is I trade a lot of my setups and things I see in here. So if there are people following along, then they can. I mean, even if it's just me and Iman, it's all good. Like I have to put my thoughts out there. I think it's so important when you're a trader, to find an outlet to just kind of dump things, because I'll speak for myself, but it helps me to process what I'm seeing. So that way, if like I screw up, I have a track record of what I did, and I can kind of go back and look at it. And this is kind of why I started a personal thread inside of the UU Discord, and it's something that Matt actually emphasized like people should do. So it's not just me doing it. I mean, there's tons of people that have started started personal threads, and they just drop all types of information in there. Some people close up shop, some people leave, of course, but that's fine. I mean, the whole point is to help traders grow and whatnot. So anyways, point of my story, I just wanted to showcase that. And of course, Matt's obviously in the general chat, and we also do live streams inside of UU as well. Matt live streams in there a couple times a week. So that's their exclusive for the premium side. If you're interested in joining, click the link in my bio. There's a Unicorn University link here on my link tree. Of course, it's an affiliate link. So, any sort of signups through that link obviously help me out. It's just like support, but no pressure. I'm just here to help you guys, showing you different things, and that's what I want to talk about with UU to start. Let's get to the next thing. We're going to talk about that data candle setup. So let's just clean this chart up for a sec, and let's go all the way to the data candle setup. Does everyone understand what that is, a data candle setup or strategy? Has anyone ever traded anything like that before? If not, that's cool. Not really? Okay. So this setup is actually quite impressive. Now, I trade an IFEG model, and this type of setup really, I would say it complements it. It's not something you could use trading like a unicorn model, which is why I trade it, because I'm trading IFEGs. So let me walk you guys through it. Let me get rid of some of these drawings, and let me go all the way back to, let's go back to 8:30. Okay, so here we are, 8:30. Let's close this off. Let's go to the 1 minute. So one thing I've learned with data candles is a data candle is when you have news, right? So let's go to Forex Factory. Here's the news, 8:30 a.m. We have PPI. Now, we know that with PPI, we're looking for volatility, right? So you've heard people do one shot, one kill, for example, right? With day trading realtor. Usually those types of expedited eval type strategies, you're going to use red folders like CPI and NFP. Anything else, not really worth it, because it's unpredictable, and there's not really much of a good win rate. But when it comes to the data candle, what we're looking for is volatility on that candlestick, nonetheless. So we're not looking for, you know, hundreds of points or anything like that. We're looking for like anything above 50 to 60 points is really, really good. So the one way we can understand if there's, you know, like a track record of, you know, specific red folders that do print larger candles, we could just click on the folder button and we can see. So January 30th was the last one. So we could easily see, if I just go back to January 30th, how many points did that candle go? Let's take a look. January 30th, 8:30. You can already see I already had it loaded up. Okay, so I'm going to just hit rewind here to 8:30, and I'll go to the 1 minute time frame. Okay, so let's go to the 1 minute time frame. So I'm only going to show this part just to show the measurement, but here is 8:29. You can see the activity starts with PPI, and then here is 8:30. So this was the previous PPI event. This was an 87.5 point candlestick in 1 minute. Okay, so knowing that, this tells us that PPI is a great candidate for using the data candle to formulate a trade with. Okay, now how do we do this? So let's go back to today. Let's go to 8:30. Wow, is today the 27th? Oh my God. Wow, it actually is. This month has flown right by. Holy moly. Cannot believe it. Okay, so 8:30, let's go right here. Okay, so here is the data candle. Now, this is what we're talking about. Now, a couple things to take into consideration. Is the data candle sweeping any sort of liquidity, right? So we can see we got previous day low here. There's also a 50-minute sell-side liquidity level there. I don't know if that's an hourly level. Oh, yeah, it is. Okay. So the previous daily low looks like it was also the hourly level. So hourly sell-side liquidity, go back to the 1 minute. Yep. Okay, so it's PDL. So, and then we, of course, had that 50-minute level that looks like it was there too. So here's how we do this. Once this candle prints, essentially what I'm going to do is I'm going to mark the high and the low of the candlestick. So I'm going to mark the top. I have this set to data high. And I'm going to set the bottom one to data low. Now, the reason I'm marking this range, and you'll understand because with IBs, we deal with ranges too, right? Ranges are incredibly important with anything when it comes to trading. Definitely something I've learned. So when I first started learning how to trade, I used to think diagonal lines and trend lines, like, you know, that go across my screen were the way to go. And as the years go by, I start realizing that horizontal lines mean more than diagonal lines. And once again, you can see why. We use these levels for liquidity sweeps, and this is a massive, you know, component of how we trade ICT concepts. No matter what model you trade, you're looking for liquidity. That is the foundation of ICT, in my opinion. So nonetheless, here is the data low, and here is the data high. Okay, and I'm on the 1 minute time frame. Now, the other thing I'll say is if you start using like a 30-second chart, you might start finding better entries, because you don't always find 1 minute setups, but I always look for them, and they don't have to be perfect. Sometimes, you know, these setups fail. It's not 100%. But what I'm looking for is I'm looking for either a sweep down here or I'm looking for a sweep up here. And my goal is to trade from one end of the data candle to the other. And that's why you need the candle to have some size to it, right? It can't be a 30-point candle. We want to be looking for things that are, you know, above 50 points minimum. And even 50 isn't the greatest, but we can see today we were at about 78 point, almost 79 points. Perfect. So once again, looking for a sweep either off the data high or I'm looking for a sweep off the data low. And the goal is once again to trade it to the other side. Now let's hit next and see what happens. So still waiting, still waiting, still waiting. Okay, so now we have a sweep here. Okay. Now, once we get a sweep like this, you can see that there's an IFEG here. Okay, so I can mark this off and I can observe it and literally just trade it exactly like how I would trade a normal IFEG. I'm going to probably try to trade either front running it if I notice there's momentum, or I'm going to wait for it to close and then I'm going to enter. So let's see what happens next. So we get this. Now there's SMT forming with ES. So this is looking pretty good, right? So this morning, like I said, I showed you in the chat, Iman and I were looking at this and we were eyeing this. However, we didn't get the setup there, right? But that doesn't mean the game is over. You just got to be patient and wait. So right here now is where we start to get our entry. So classic IFVG entry setup. We've swept the data low and we have SMT. Okay. I'm just going to plot the IFVG here. Indicator will not show it just because it's not sweeping a 15-minute level anymore. That was way up here. That's been invalidated. But nonetheless, the level still works. Thanks, Finesse. So I literally kind of entered on this candlestick, I think a little bit before close because I could tell this thing's closing. And once again, the plan is to take the trade from here and take it all the way up here. So two ways to go about this, okay? You can skim profits, and this is where it depends on the trader and how they trade. And this kind of, I guess, talks more to risk management. Whereas, like, are you trading like one-to-ones? Are you trading, 2R ratio? Like, what are you looking for? Are you skimming profits along the way, right? Because there's some clear TP levels here, right? I mean, there's a super clear TP level here. If you think about it. There's also another one, I'd probably say like right about here, right? Because there's an FVG here. And then, of course, the final one would be your data high. So if I'm looking at this, the way I was doing this was I was looking to trade a 1R. And my stop loss went at the bottom. And if you look at it from this way, let's actually just pretend as if we took it from here. Where's 1R? So this would have been 1R if you waited for the candle to close, stop loss at the bottom. I can't remember if this tags it. Okay, perfect. So like I said, there's a few ways that you can trade this thing. Okay, if I was looking to just catch a 1R trade, boom. This is caught in less than 2 minutes. And that's playing off the data candle. That's the sweep. So this is like a exactly perfect situation that has played out. IFVG, you even got a liquidity sweep. This is pretty textbook. If I put up my checklist, we can go through this quickly and I can show you what I mean, right? Like, okay, so higher time frame liquidity sweep. Well, we're considering that as our data low, but the PDL was there. Premium and discount, we're below the daily EQ, and as everyone knows, I use the daily EQ, which is a dynamic level, to gauge whether I'm going to be bullish or bearish on the day. And if price is below the daily EQ, I'm looking for sell-side liquidity to go long. So clearly I'm on the right side of premium and discount. Is there an instant reaction? This looks like a pretty good reaction off the data low, I would say. Let me just make this a little bit bigger. Right? Pretty good reaction. Strong momentum. What does that mean? Well, that's this candle right here, right? We're looking for the least amount of candles to confirm through the IFVG to confirm it. When you start seeing that is the most ideal thing you want to see as an IFVG trader is like a 3 candle setup. That is perfect. So once I see that, I mean, I'm in. Clear drawn liquidity. Well, of course, I already marked off some liquidity. There was a level here. We have PDL up here. There is a FEG here, and of course the data high is the main level that we would be looking for. Okay, Iman, what's up, brother? I'm sorry, man. I need to I'm gonna pause here for a sec. I've been trying to get Iman to trade market order entries and not limit order entries because he keeps getting front run. I'm not trying to call you out, bro. All love to you, my friend, but we got to get you on the market orders. That's the way to go in this game if you're trading IFVGs, if you ask me. So anyways, let's get back to this. Is it singular? Yes, it is singular. Why is it singular? Because there's no FVGs like lined up here. You know when we see like a spiking, when we see spiking price action, it's just leaving huge imbalances one after the other. That would mean that when the IFVG sets up at the higher time frame level, and starts to turn around, well, basically it's not singular anymore because there's tons of FVGs that price could react from in reverse. So I'm looking for FVGs to be formed higher than where my entry is. So something like this is pure LRLR here, right? So this is like ideal. So this is singular. And then in terms of the higher time frame IRL, all that means is price moving from like a higher time frame FVG, right? So in this case, because we're going long, is it forming from a 15-minute FVG, 5-minute FVG, 1 hour FVG, 4 hour like what is it doing? And then of course we have SMT here. So I'll mark off the SMT. I don't know if this was actually moving off of a I didn't check actually if it's moving off of a FVG per se. I don't think it was, but you never know. No, lots of sweeping candles there, and 4 hour, no. Okay, so let's go back to the 1 minute. So the answer to that question was that there was not any, oh, I ruined the surprise there with the price action, my bad. Okay, so if you look at my checklist, I know it shows like a score here, but that's irrelevant. The point of the story is, if I can get as like majority of these filled out, right? The last two don't need to be there. They're not mandatory for me. Like SMT and a higher time frame IRL are not mandatory. Singular, clear drawn liquidity, all the rest, these are mandatory, right? So 1, 2, 3, 4, 5, 6 things. I need 6 pieces of criteria for a trade to be like proper A+ for me, right? And then of course, if I get these additional things, this turns into like a ultra A+ setup. So in this case, because there's only one criteria missing, this is a super amazing setup to be a part of. Okay, and I don't want to get front run on these types of setups. I used to when I first started learning about IFVGs, I used to set limit orders, thinking, I think it was just how I learned how to do it, or how to trade it, was to use a limit order at the IFVG. But what I started noticing is the front running is just insane. Like price never returns back to the IFVG more often than not. And ideally, I don't want the IFVG to be this small. I'm not going to deny this. But because it's a data candle setup, just seeing the presence of the IFVG is good enough because I'm looking for that 1-to-1, right? So my entry was somewhere around this candle, probably a little lower. So I had hit 1R basically, well into this setup. It was beautiful. And the one thing I'll tell you about 1R setups is, like, if you're risking $250, well, you just made $250 in 2 minutes. If you and I said this on the last live stream, if you are working towards scaling your accounts, right? You're trying to get to 5, 10, 15, 20, 25, 30 copy traded accounts. Just multiply $250 by that and think about what you just did, right? Because if you have 30 accounts and you just made $250, that's $7,500. Okay, now I know a lot of people are working to get to 30. I would say the standard for most people is like 5 to 10 accounts. Like that's probably where a good, I would say that's a good goal to set for yourself if you're new and you're working towards it, or if you're still in the process but you're still kind of early. 5 to 10 accounts, you can do amazing damage with that. And with 10 accounts, once that's pretty easy math, but it's $2,500, right? If you had 5 accounts, that's $1,250. So if you think of it that way, to make that much money in 2 minutes is mental. Like, it's crazy. But that's why we study trading and why we study these types of concepts, because once we start to perfect it in a way that makes sense to us, all that hard work is now paying off for you, right? So something like this, I was done my funded account trading literally by 8:45 today. Now, as you can see what happens next, price, because like I said, the goal was for price to hit this level here, right? So here's another TP area right there, right? We talked about that. So you can see price pings that level. And we don't know whatever is going to happen with price, right? Price will do whatever it wants whenever it wants. So we just have to let it do what it's going to do. So if you're trading this waiting for price to get to the data high, and this is now another type of risk management way to trade, you could be skimming profits at these levels, right? So maybe right here you would skim some profit. Right here you'd skim some more profit, and then you would leave runners at the data high. And you would move your stop loss to break even, or like $1 above break even, right? So that way, if you don't want to get nailed with the fees, right? You want to keep everything in the green, and then it's just a matter of letting price do what it's going to do. Now you can see as time moves forward, we're getting closer and closer to 9:30, right? And we have to be mindful of that too, because we know that's when the market opens. We know that's when there is going to be an influx of volatility, and we never know what it's going to do. So you can see what's going to happen next here, right? So for me, I had ended up closing this trade around here. I'd taken some profit here. I'd taken some profit here, and I ended up closing the trade fully here. So I didn't go for the 1R trade here. This is what I've been looking at doing more so, and I'm going to explain to you the risk management behind that in a sec. But for this trade, I skim profit multiple places. When price rejected here, now this is another thing to talk about, is the discrepancy between MNQ and NQ. Now I know people were trading IBs yesterday, and ES and MES had some discrepancy with the low getting swept. If you're trading ES on that IB, you were safe. If you traded MES, you got wicked out, and then that was like a horror story. But the same goes with levels like this, right? If we look at the dollar value here, from here to here, that's 12.25, okay? That's a pretty good distance away from the data high. Now I want to show you NQ for a second. Let me scroll back to 8:30 here. Where are we? Right here. Turn on my highlighter. Okay, so this right here is our data candle at 8:30. Look at the high right there, right? Okay, so this is where I made my mistake today, because I should have sold, and I did not sell fully, and I realized it after the fact. But I showed you MNQ having a 12.25 point differential between how high the price went and where the data high was. NQ was $4 or 4 points away from the data high. And the way I trade is I don't wait for levels sometimes to get hit, especially when price is this close to it. I'll just take the profit and be happy with it. So I missed that this happened. Had I noticed it had happened, let's go back to MNQ right here, I would have just taken all my profit up here, right? All my profit would have been taken in this range right here, 100%, right? So this would have been almost, 45 to 50 points worth of profit taken off. I mean, I already hit my daily goal. And it's a big reason why I ended up taking profit here, because I figured if I didn't take the profit here, and this thing were to go back down to break even for me, then I would be below my daily goal. And this is where we have to think about greed, right? You have to measure that level of greed, and you have to use your logic. So I already knew NQ was $4 away. For me, I felt like I missed it. So I exited my trade, the remaining parts of my trade around here, right? Near 1R. So I still hit my daily goal. That's all that mattered to me, was just getting my daily goal. Exit funded accounts, move on to Evals. It's literally that simple. And I noticed, I think it was all this up there that said, +2 and then -1 on the eval. Like, that's what you got to do. Don't keep trading your funded accounts throughout the day. Like, get your win and close it down. And then if you want to trade evals after, like, that's what it's there for, right? So that was the data setup play. I just want to keep hitting next because I want to just show you what ends up happening. So price then goes literally back to break even here, right? So it was a smart move for me to exit here. Price would have tapped me out. I would have been below, and then I might have, like, who knows what would have happened after that, right? Like, I might have FOMO'd into stuff or been tempted to do other things, and then I could have lost money on the fundeds, right? And then as we get closer to 9:30, this is what I want to talk about next, is that we never know the type of volatility that's going to happen, okay? So we know that there's been crazy trending days, but watch this. Boom. Look at that spike on this candlestick, right? Granted, this went up, right? It went the right way that I was hoping for price to go, but you never know what's going to happen. They could have easily gone the other way. So it's important to just wait, let the market do what it's going to do when it opens, trade with probabilities that are on your side, and don't get greedy, because we're not trying to be perfect. We're just trying to be near perfect. And the only thing we should, strive to be perfect on is following our plan. So like for me, my checklist is on the right here. If I was looking to skim profits, well, I did that successfully, and I'll show you what I mean just to show you proof. I shared it anyways, but like right here, you can see my executions, right? So I executed around here, TP1, TP2, exited on this candlestick, right? So I held true to my system, didn't break any rules there, and that's the most perfect thing you should try to aim for. And if you don't know what your plan is, you need to take some time and write it down, right? Get on Notion, type it out. Like it's like a business plan. Think about it like a business plan, because that's essentially what you're doing when you're trading. It's a business, right? Just want to double check. I haven't missed anything. I thought I saw somebody post something. Just double check quickly. Okay, that was in the Gen chat. There was something there. Is Max here? Okay, so he's not here, so I won't talk about it. Okay, so let's go to the next topic of conversation. I mean, if anyone has questions, feel free to drop it, right? Finance says higher time frame IRL are FEGs, OBs, and breakers, right? So for me, a higher time frame IRL internal range liquidity is just an FEG. It's not an order block. It's not a breaker. It's just, for me, internal range liquidity means FEGs. So if I see a setup like this forming, with a, like I said, with a higher time frame liquidity sweep, and there's also a gap there, like an IRL, I'll say, just to keep our terminology the same. That's amazing. Like that's showing you amazing confluence, right? I know other traders, what they do is they trade SMT inside of internal range liquidity, higher time frame internal range liquidity, and they trade the order block, right? Or that sometimes they trade the IFEG. I've seen two different types of models. You guys probably know Sniper. Sniper trades that forever model. I think he's trading off of the order block right here, right? There's another guy I know named Colin Jones, and he's trading, I believe it's called the Trinity model, and he's looking at the IFEG. So he's trading the IFEG, but he's looking for additional pieces of confluence that are mandatory for him that are not mandatory for me, right? SMT, for example, and the gap. I'm just looking for higher time frame horizontal levels to sweep, and I'm looking for instant reactions and strong momentum at those levels to confirm the IFEG. So that was my setup for today in terms of the funded play. Steve says, nice trade, missed it. However, my bias was bearish. What was your bias before you took the trade? Well, once again, my bias is irrelevant when I'm taking a data candle trade, because the data candle trade is all about using the data high and the data low. And the play, once again, is to just try to trade from one end to the other end. And as you can see, what happens with price today is that price swept the data low. And regardless of how the trade played out, look at what price did. Price swept the low and went to the other side. And you can see it went to the other side. Finest says, does daily bias influence the way you trade IFEGs personally? 100%. And my daily bias is set based off the daily EQ. So if I'm trading like a proper IFEG model setup, anything, if price is below the daily EQ, I am looking for bullish setups. And my bias can change in a day from bullish to bearish the second price starts closing above this. So let's see what happens next, because there was other setups that played out today. Let me just hit play. Okay, so here was the next play that happened. So let's clean up the chart for a sec. Okay, right here. And so here was the next setup. So we get a 50-minute level sweep. Let's put up the checklist again. Higher time frame liquidity sweep. So I'm using the 50-minute sell side liquidity level. I'm looking at premium and discount. Am I on the right side of it? Also, another thing to point is I don't want to be taking longs that are too close to the daily EQ. So I want to make sure that there is a good enough distance, because the daily EQ works like a support and resistance level. If we just scroll to the left, look at all the price action here and here, right? Now, granted, this daily EQ is dynamic, so this level starts to shift. But in the real time of things, this is where the daily EQ is. And it's telling me that when price is reaching there, that I should be expecting some sort of a rejection, right? Because it is some sort of SR level. It can be treated that way. But my bias, like I said, if it's below, I'm looking for longs. So in this situation here, my trade setup, I chased on this candle. I front-runned it because I could see that there was momentum here on the 1 minute time frame. And I entered this on my Eval account, and I literally took it from here to about here. And I can't remember exactly what my... let me see if I can just quickly find my journal. I'm just going to cross-reference it quickly. Let me just log in for a sec. 1 sec. Also, just double check. Everybody here has a journal, right? Like a trading journal. I hope you're all I hope you're all journaling your trades, even like the ones where you screw up. I hope you're still journaling them, because this is how you're going to find the repeatable mistakes. One of the most common repeatable mistakes I've gone through, and I'm sure other people do, is I started noticing that my risk per trade was not the same. So some trades it's like I'm risking $500. Some trades I'm risking $250. Some trades I'm risking $200. That can get you into a lot of trouble. And I noticed that was a big mistake for me. Is that a mistake for you? Okay, so it looks like I got in on this trade at 24,872.75. Okay, I was pretty close. All right. Stop loss was just tucked away under the FEG. And like I said, I was aiming in this trade for literally 1 hour. That was my goal, to get as close to 1 hour as possible. Now, here is 1 hour right here, right? What I ended up doing, nonetheless, with this trade was I just exited off of this one candlestick, and I didn't need any more because I was on an eval, and I had really risked a lot. Because it's an eval, I'm trying to pass it. I'm going to be more aggressive on these, right? So I'm going to be risking, probably like $500 per trade, because I'm trying to get to 3K, right? So my goal is to just try to chip away at that as fast as possible. And with Lucid, you need a 50% consistency, right? So I don't know if I want to try to aim for like a $1,500 day and then another $1,500 day, because I'd rather kind of chip away at it at more like reasonable levels. That way it can still offset my 100% pass level, like that consistency. So I end up just taking my profit literally off this candlestick, and that was more than enough for me. Like right here, that was more than enough. Yeah, I think, Steve, you're talking about a unicorn here, right? This right here. It's funny you mentioned that, actually. I think that's what you're talking about, not this. I mean, there is a unicorn here too, but I want to just show you this. I think with MNQ, this level here. Oh, sorry, right here. This is the breaker block, right? So that level is 24,831.50. The candlestick that would have tagged that entry front runs right here. 24,832.25. 75 cents. Now, I don't know. I think I saw Matt say he got front run today. I don't know if that was the front run or if that was the ES IB setup, because I know there was also a front run there off that EQ. We'll talk about that later. But going back to the setup, this was the play. And the other thing I'll say about this too is usually when, like I'm looking at trades like this, the tighter your stop loss is to invalidation, the closer your TP is going to be, right? So for me, like this is a 54-point stop loss. Like that's pretty big. If I had moved it just a little bit tighter at 48 points, this play turns to be a bigger play, right? Like 1R is about here now. So even if I took profit here, I'm pretty close to 1R, right? Somewhere around here. Like I'm still pretty close to 1R. I'm not that far off. And as you can see, price would have tagged right back into the IFEG right there. So this is a great example of where the IFEG confirms here and the IFEG itself is starting here. So you can see that if someone had set a limit order on this setup, you would have been tagged in, and then you would have probably taken your profit up here because that daily EQ is a very major support and resistance level. Now you get SMT forming this way. You have another setup on the flip side of this, okay? Okay, so follow me here if you can. I'm just going to remove this IFEG indicator for a sec, and I'm going to show you another type of play that you can use with IFEGs, which is, like I said, using the daily EQ as a support and resistance level. So in this situation, price literally pings or just misses pinging the daily EQ. If we go to ES, however, ES, I believe... here, let me go back to the 1 minute here on ES. Let's clean up the chart here for a sec. Let's go back to... Okay, perfect. So 10:15 right here. ES has actually tagged the daily EQ. If we go back to NQ, MNQ. Oh wait, that's 9:49. Whoops, wrong time. 9:49. Okay, I'm way in the wrong place. 9:49. Okay, 9:49 is right there. Hold on a second. Let's go. Unless I'm looking at the wrong date, which I probably am, knowing me. So that looked a little off. Oh, maybe I'm not wrong. Okay, so I'm mistaken. I thought ES had tagged the daily Q. It did not. But what we can see here is there is SMT. Let's go back to MNQ. NQ just nearly tags the daily EQ. It doesn't have to sweep it, but what it does is it creates SMT at this level. One of the major things I look for if I'm trying to trade off the daily EQ is I'm looking for price to move well below the daily EQ and then literally start to grind its way back up like this. And then what I'm looking for is exactly what I normally look for. I'm looking for the same concepts. I'm looking for now in terms of premium discount, that's irrelevant in this case because it's a support and resistance type play. The higher time frame liquidity sweep is literally just still using this level, so it's a little irrelevant. But I'm still looking for an instant reaction, strong momentum through the IFVG, clear draw on liquidity. I'm looking for it to be singular, right? All these things don't change. If there's other things involved like SMT, maybe there's a higher time frame IRL, once again, I can take this trade. So with a setup like this, this is another great setup that was there, and your stop loss could be like right here, for example. And if we look for that 1R move, well, right here, boom. And this is kind of why I want to talk about the 1R plays, because I'm noticing that 1R moves are winning a lot when it comes to these IFEG setups. Trying to hit home runs almost seems irrelevant. And just to put some perspective, now, if you are on an eval, your goal is to try to pass that thing as fast as possible, right? So I mentioned this in yesterday's live stream that you don't want to be You don't want to go too fast if you don't have a proven system yet and if you're learning. If you have a proven system that you know is giving you results, like you're getting 70% win rate, for example, you know you're profitable month over month. You know your system works, right? So what that tells you is going for a one-to-one can actually work for you, okay? And why does that work for you? Well, let's check out a win rate calculator. So let's say we're going for one-to-ones. I mean, it's pretty obvious, but if you're looking for a one-to-one setup and you're wondering where your break-even is, well, it's pretty obvious that your break-even is at 50, right? So as long as you win 50% of your trades, you're at break-even. But if you already have data collected and it's showing you that you are, let's say you have a win rate of, let's say your win rate is 55%. That's profit. Let's say your win rate is 60%. That's still profit, right? You can see the numbers growing. So that's let's say that's, risking $300 per trade, right? For me, what I've noticed with IFVGs is that if they're traded properly, and if you look at the way I've been discussing IFVGs and how I've traded them, and I look back at my journal, the win rate is in the high 70s. And it's not impossible. Now, it's not 100%, of course. Nothing is 100%. But this thing is like 78% roughly, right? It ranges. And what that tells me is that I have a super profitable strategy that if I just trade one-to-ones, I'm going to still be profitable month over month. And what that means is now I can actually risk more per trade. So maybe instead of risking 300, maybe I'll risk 500, right? And you can see the difference that makes, right? Of course, there's more risk involved because you're risking more money. And if you were to make mistakes and those mistakes compound, you could blow up your account. But here's the thing. If you are trading with a 1-to-1 R setup, what this is going to also help you do if you are trading with an account that has intraday drawdown. So Take Profit Trader, for example, on the fundeds have intraday drawdown. Of course, we know Apex has intraday drawdown. What that means is that trying to look for home runs doesn't really work very well because the intraday drawdown can literally wipe you out, right? Even if you're taking profits, it can still wipe you out. It's moving dynamically throughout the day. So by taking a 1-to-1, you're securing a good amount of profit, and you're also keeping your intraday drawdown in check. So what I'm getting to is, and something I've been thinking about is, if I move to a 1-to-1 ratio setup, I can get in and out of the market pretty quickly. I've already showed you 3 trades now where the 1-to-1 literally worked. And that was all today, all before 10 a.m., all on NQ. But the reason you would do this is to not be impacted by that intraday drawdown, number one. And you just every day chip away at reaching either a buffer or passing the eval, right? Most evals don't have the intraday drawdown, except for Apex. Apex is intraday drawdown across the board. But like TPT, for example, doesn't have intraday drawdown on the evals. It's end of day. But then when you go to the funded side, it's intraday. I don't know why they do that. Lucid, to me, just seems like the greatest prop firm right now. They have a 50% off deal going on. I think if you use one of Ash's codes, you'll get that deal. He's promoted it pretty massively. I actually ended up picking up a couple of those accounts. They worked out to I think it was like $65 US an account. Yeah. T4, this is recorded, my friend. Hopefully it doesn't have any sort of glitch. I know the recording from the 17th looked like the video froze for some reason. So I hope this doesn't happen today. That was the first time I noticed that happened. Someone had made a comment, but typically it hasn't happened. I've recorded a bunch of these, a lot of these, and they haven't glitched. That was the first one. So maybe something happened with my internet or who knows. But going back to the 1R concept in terms of the risk management piece, is that if you're on a funded account and it's fresh, I think going 1-to-1 with intraday drawdown is the way to go, because once again, you keep your intraday drawdown safe, and you just keep stacking wins. Now, as we know, when you get to the buffer, then the drawdown stops. And this is where, if you wanted to play with like runners and things like that, it makes sense, because you're not really impacted now with the way price is going up and down, because it's not impacting your intraday drawdown anymore, because it's frozen. So does that make any sense? I hope it does. One thing I also learned about myself is I hate being in trades for a long time. I mean, I used to be able to stomach it, and I say that loosely because I don't think I really was. I just think I've been through it enough times to kind of understand what it feels like, but that feeling sucks. For me, it really sucks. I hate being in trades that take, 50 minutes or an hour. Like, I just can't stand it. Ideally my trades are lasting, less than 10 minutes tops. Sometimes it's like the other day, there was a trade that was like, I think 47 seconds. My day was done in 47 seconds of trading in terms of funded stuff. And the thing is, like, I think I'm only sharing all that just to show you what's possible and to show you a different perspective. And, I also talk about trading IQ. I've talked about trading personality. It's taken me a couple of years, if not 3 years, to put things together and figure things out. So this isn't something that's like happened, in a heartbeat for me. Like, this has taken me a long time. If anyone, knows me from last year, I was literally learning as many different things as I could. And I was trying all types of different models because I was learning, and I wanted to feel what it felt like to trade those models and see, in terms of my data, like, am I profitable trading this thing with live price action? And what ends up happening is when I started noticing that I was following the rules of, how I was learning it, but I kept stacking losses. That's when I started blowing evals and things like that. I'm like, this doesn't make sense. Like, I'm doing something wrong, or maybe this is not the right model for me. So it takes time to figure these things out. I think any model you use can be profitable, because they all work. The thing that stops you from making it work is you, right? Like, it's our own issues that stand in the way sometimes of these things. And if you look at any sort of successful trader, you'll see that they're not doing anything different than you are in terms of the technical side, perhaps, right? So then you have to ask yourself the question, like, what are they doing that's different if it's not technical? Well, guess what? It's mental, right? It's the way that they manage the trades. It's the mindset. It's the ability to have patience. It's the ability to have, discipline. And then, of course, being on the charts every single day is only going to increase your trading intuition, right? Understanding when you start seeing strength, understanding when you start seeing weakness, right? Matt often won't take a unicorn, for example, even though it might look like aces to you, but he will say, I don't know, I don't like the momentum here, and he'll pass, and you'll take it. And then guess what happens? You hit stop loss, and Matt goes, hey, this is why I didn't take it. But you can only develop that type of skill, that intuition, if you've been on the charts long enough. He's been on the charts for over 7 years, right? Like, you can't expect to be where he is. He's in his 7th year, 8th year. Unless you are also in your 7th or 8th year, then that changes things. So anyways, long rant, but I'll stop there with the rant. Let's get back to the charts. Let's get back to the technical side of things. Let me see what else I had to talk about today. Okay, let's talk about IBs. Let's pivot. So I showed you some setups that played out here today. I don't know if there was actually any more. Let me double check. Let me just turn on this thing again. Close that off, because I think there were a few that happened during lunch, if I'm not mistaken. Let's just see. Okay, so let's just take a quick peek. And once again, if anyone has questions, drop it in the chat. No stress. Okay, so, and then we had a lot of chop that happened in the later part of the morning. And I'll be honest, like, being able to be green before the market even opens, I used to not even think that was possible. And, I'm showing you a way with the data candle play that allows you to see that it is possible. And it's such a good feeling to be able to close your funded account before 9:30. And I mean, if you don't have a day job where you're sitting at your desk, or let's just say all you do is trade, like, to be done with your day at 8:45 in the morning before 9:30, like, you could just log everything off, and that's the whole point of trading, is the time freedom, right? You're able to do whatever you want, most likely go to the gym, focus on other businesses, and Matt talks about, right? Or if you're a Discord warrior, you stick around, right? It is what it is. Now, here's actually another interesting setup. So this happens at 10:50. Now, it's funny I say this because, like I said, I like to trade evals after I trade fundeds. I had to go pick up my daughter from school at about 10:45. So when I came back, let's just put this as 10:40. I left my desk at 10:40, and I thought, looking at the left, I was like, oh man, this is gross. There's nothing here. Like, it's perfect time for me to go pick up my daughter anyways. She's done school early today. So, and then when I came back, I saw this. I was like, oh my God, what the hell, man? I would have totally taken this. Why would I have taken this? Well, I'll show you why. So we have a 50-minute sweep. Right here. Right, buy side liquidity level swept. Here is the internal range liquidity that I talked about right there. Boom. 50-minute IFEG, or sorry, FEG right there. So there's a gap involved. Let's go back to the 1 minute now. Okay. And then let's go back to the way this thing looks. Let me just make sure this is all marked off properly. I don't know why it's not showing it up on there. It was showing it for a second there. Then it took it away. Oh, that's weird. Double check my settings. 15, 11, 6. It's probably because it took it here. That's why. Okay. Let me see if it happened on NQ. Sorry, guys. Bear with me for a sec. I know that it populated that setup there. And I'm just doing it because there's a nice visual representation. I mean, I can still map it in myself. There's the long, and let's see if it shows us the short. Now, actually, this brings me to another topic of conversation quickly. While I saw it, I did want to talk about this. I mentioned how when an IFEG setup is too close to the daily EQ, that for me personally, I will stay away from that trade, only because this is like a support and resistance level, right? Like, if we just scroll back, I showed this earlier. Look at the way this daily EQ level is holding like a line in the sand, right? I showed it around here, right? And I said, hey, this level is important, and it front runned it here. But then look at how it's now kind of flipped it into support, right? Okay, so here's what I want to show you. Because I saw it and I wanted to show it. Now, two things about this setup. The first thing is this IFEG is way too small, okay? So even though there is a super tight gap there, it's too small for me to take. I would not really touch these ones. And if I did, it would be like super, super risky. I'd have to have a lot of things going for it. But the big problem I have anyways with this setup, besides the size of the gap, is that look at how close it is to the daily EQ. My fear with something like this is that it bounces right off of this and doesn't get to where I want it to go. Now, it's not always the case, but like, because that FEG is so small, let's just say my TP was here, right? Does this hit 1-to-1? If it does, that's hilarious. Probably does, right? Let's see. Oh, it probably does. Nope. Just misses 1-to-1. goes back up, and you can see the reaction, right, off the daily EQ. Okay, and then it would have hit stop loss, right, if I didn't take TP at 1-to-1. The indicator shows some TP liquidity levels here, right, that look pretty obvious, right, to reach for. This is now a stop loss, if not a break-even trade, right, if you didn't take the front run 1-to-1. But my point is, I would avoid these trades because they're so close to the daily EQ and that it's a support and resistance level. Like, I'm expecting a bounce from here. And what do we get? We get a bounce. So it's doing exactly what the probabilities tell me it does. T4K, what primary sessions do you look to trade? Just the RTH open, or do you trade the full day? So on funded accounts, I'm exposed to the market from about 8:30 to, I don't know, 11:30ish max. But typically the best setups have formed between 8:30 and like 10:30. So if I'm on a funded trade and I've already, hit that trade between that timeline, if the first trade is a loss, now, yeah, actually, this is another good thing to talk about. Like, if like, here, let's do it like this. If the first trade, if the first trade is a W, stop trading, right? Now this is on fundeds. Okay? If the first trade is a loss, I will risk one more trade. Now, there's a caveat to this, okay? The caveat to this is some people use a number to say how many trades they'll take in a day. So some people say, hey, I take one trade a day, win or lose, I stop. Okay, cool. Some people say, hey, if my first trade is a loss, then my second trade will be my final trade. I'll see if I can make that back. Okay. Me, on the other hand, for me, it's a dollar thing. Okay. I'm not sure if you guys use the lockout feature, but Tradeovate has now put a lockout feature. I think this is very important because it's a mechanism that's there to keep you safe. It's a mechanism to help keep you on the right side of things, because truth be told, like, sometimes you cannot trust yourself. The FOMO just takes over, and it is like very, very hard to like not succumb to. And having that lockout feature keeps you safe. I can't tell you how many times I've gone on tilt where I got so pissed off I got wicked out. And guess what happens next? In a blink of an eye, you should have just been, or I say you, but I should have been down, a few $100, maybe $500, and now I'm down $1,500. Maybe you've blown your account, right? That's happened to me. I can't tell you how many times that's happened to me, but I've learned from my lesson about that. But I think having the mechanism there in the first place is a good way to just protect yourself from yourself and just keep you on the right side of things. Because, like, if you've lost $500, you've, like, for me, for example, my loss limit is 500. So, like, what that tells me is if my first trade is a loss, depending on how much I risked on that trade, will tell me how much money I have left to risk. So if I risked $400 on that first trade and it's a loss, well, on that second trade, I'm not going to risk more than $100. And that's the sad reality of what happens, because if that $100 trade is the real trade that goes crazy, it is what it is, right? So this is where you have, like, I have to be smart. So I typically will try to risk, usually on average, I think my sweet spot is like 250 to 300 if I'm on a funded account. Unless like it's like a big trade that I just feel like I feel really good about, then I might go a little bit more. But remember, I have a dollar value that I use, right? So even if let's say I risk $500 on that first trade I took and it's a loss. Well, guess what? I'm locked out now. It's there to keep me safe, because I don't want to lose another $500, right? Because then I'm down minus 1,000. Tracy says 100%. Your butt gets heavy and can't get up, and leave it in that tilt. 100%. T4K says agreed. Risk management is one of the hardest skills to truly master. So having a crotch until you believe that you can do it without wavering is so powerful. And it takes time to crutch. Yeah, I know. I just wanted to say that. I thought it was funny. Yeah. If you're able to not waver, like, yeah, so powerful, 100%. So yeah, I mean, I'm not trading the full day. I'm trading 8:30 to about 11:30. The best trades are going to happen at New York Open. We already know this, right? The manipulation happens right at New York. A lot of people trade looking for that manipulation, right? And that fits with the liquidity sweep with the ICT plays. Anything that goes beyond that, because I am at my desk all day pretty much, I'm moving to evals. Honestly, I'm just moving to evals, and I'm aggressively risking. Like, my risk is different. It's not the same as my fundeds. And it just depends on where I am on those evals, right? Like, I mean, and it depends on the setup. So setup like this, I would not risk on even though I'm on an eval, because I still have to follow my rules. With an eval, I don't have those rules like funded where, you know, if I lose my first trade, I stop trading. No, it's an eval. Like, I'm going hard. The whole thing for me is to pass that thing as fast as possible, because I know I have a 70 to 80% win rate with IFEGs. So I should like fall back on that data. That's what I collected it for, is to have confidence in what I'm doing. And the reason I have this checklist indicator is because like I couldn't trust myself to follow the rules. So if I literally put it right in front of my face now and I make it this big, like it's staring at me in the face. So like if I have a trade that's, you know, too close to the daily EQ, then I know I'm not on the right side of premium discount. Like it's right here, right? And I know, like, I'm looking at it, and if I take the trade, I'm looking at this, and I'm going to tell myself, like, you are breaking a rule. That is a stupid thing to do. So I'm not sure what you guys do, but, like, 100% put up a checklist on your chart or keep that paper next to you, whatever works best for you. For me, I found this indicator, and I mean, you can use any checklist indicator, but for me, this one was the best one that I like to use. And I just kind of configured it to the things I like. So once again, in terms of the funded side, my risk is based off of money, not so much off of the number of trades. So that means, once again, if I'm risking $500, you know, and I'm risking $100 a trade, like I could take technically 5 trades. So I don't limit myself by like 1 or 2 by a number. I limit myself based off of a dollar amount. So just want to put that perspective there. Looks like there's a setup happening. I just want to see what we have going on here. Something pinged off. I just want to double check. Active bearish FEG. Oh, look at that. Off the daily EQ. Well, we can watch that. So a couple things with this setup. I'm just going to pivot for a sec. I mean, this is basically what I would do exactly if I was trading, but like, when a specific level gets tagged, and let's say there's, you know, in this case, there's a 50-minute level that also got tagged, I'm going to start going between the 1 minute, 2 minute, and 3 minute time frames. And the reason I'm doing this is that I'm looking for the cleanest setup, and I'm looking for a setup that is singular as much as possible. When I'm looking at this, you can see the indicator for me is already marked off multiple FEGs, and it's a series of FEGs, but it's put it together, right? This is a safer way to trade IFEGs. If I go to the 2 minute, you can see it's even further compressed, right? Like, so if I'm looking at this setup, is this a good setup or not? I mean, there's a nice, let's go to the checklist, right? Like, higher time frame liquidity sweep. Yeah, there's our buy side liquidity sweep. Premium and discount, where we're playing basically a daily EQ setup. Instant reaction, 100% off the BSL as well as the daily EQ. I'd say so. Strong momentum. Yeah, there's strong momentum ripping through here. Is there a clear draw on liquidity? Well, I guess these two levels look pretty clear to me, right? Do they symbolize anything special? Let's find out. Only way to tell is by backing up a bit, right? And it doesn't really look like it, right? It's not like it's like a new, so like right here you could say this is the New York low, right? Like that would be a very key drawn liquidity level. So let me just mark that in quickly. Let's go back to the 1 minute. Now, do I like the size of this IFVG? Because that's another thing to consider, right? So it's about 23 points. That's not bad. So, I kind of do like this. All this just broke your fast. All right. Time to rock and roll. So, I guess I do like the draw on liquidity. Is it singular? Okay, so how do we define singular? Are there FVGs located where we want price to go? Well, guess what? There's one right here. So is it singular or is it not singular? Let me just mark this off. FVG. This is where it gets tricky with something like this. Typically, when I'm looking at the idea of singular and non-singular, yeah, this I don't like here for sure. If I go to the 2 minute though, the 2 minute actually shows me that it's compensating for that. So what does that tell me? It tells me that maybe I should wait for this to confirm, not let the 1 minute confirm. Because I don't know what price is going to do here. So let's just treat this 2 minute as the actual setup, not the 1 minute. You can still observe the 1 minute, see what's going to happen. So on the 1 minute, it is not singular. On the 2 minute, it is singular, but it hasn't confirmed yet. Is there a higher time frame IRL involved? Let's double check. Let's go to the 5 minute. Oh, maybe there is. Now you're probably wondering, why are you using the 5 minute as your higher time frame? Well, it's because it's higher than 1 minute. That's the only reason. It doesn't have to be, exclusively on a 15 or exclusively on the hour. Of course, I'm looking at those levels, but I'm just looking for any sort of gap that is higher than the 1 minute. And I would like to use the 5 minute as my basis. So let's just go back to the checklist. Let's check off higher time frame. And then is there SMT? Let's go to the 2 minute. Let's go to the 3 minute. Not really showing me SMT per se, but this is, let's go back. I remember I had, so like, are these levels? No. So it doesn't look like there's any SMT here, right? What about this level? This is going down. How about this level? Both are going up. And then this one's higher. So there's no SMT. We can keep that checked off. Let's go back to the 1 minute now. And where were we? Right here. So this was that setup. Let's go back to the 2 minute. And let's just see what happens here, right? Because it's looking pretty good. Of course, it's 2:15 on a Friday. Can't expect much. But we can tape read a little bit. And I'll stick on the 1 minute only because I just want to see what that reaction is to that FVG, because that's what made it non-singular, right? So there was a higher time frame IRL, but there's no SMT. Everything else checks out, but singular is a huge part of the model, right? Like, this is a mandatory thing. So if I'm taking this trade without having a singular setup, I'm technically not trading what I would deem as A+. Sometimes, I will take that risk, but I'll understand the risk that I have, right? I might not take that with a funded, but I might take it with an eval, right? See the risk? I'll be a little bit more risky with eval. I'll be less risky with funded. We'll take a look at the IB stuff in a sec. I just want to keep looking at this and see what happens. Have some water. And once again, if you have any questions, feel free to drop in the chat. And as we all know, part of trading is just sitting on our hands and waiting, right? Like, usually when, if I share a screenshot, or if someone else shares a screenshot of a win, it looks, like, oh, wow, that happened so fast, right? Happened so fast. But guess what? It doesn't happen that fast. The results I can show happen fast, but the setup itself is not fast at all, right? Do I live trade? No, I do not live trade. But I just share posts of like what I'm seeing in real time inside Unicorn University. I think the only time I would ever consider doing a live trading session, and I'm not saying I'm doing this, I'm not sure I would ever want to do this, but if I was running my own Discord, I think that's the only time it would make sense to me to live trade. Because if you're like, running that type of business and you're an influencer that way, then, I mean, don't you want to be trading with someone live? Don't you want to learn from what they're doing in real time? I would think so. Now, I know I always trade, I know I always live stream at 1 p.m. ET, but we can obviously still tape read and paper trade. I'm not ever going to ask anybody to try to trade here for sure. Can you show your checklist indicator again? Yeah, no problem. It's checklist by TazFX. Let's go to the about script. Yeah, right here. So this is what it looks like when you have it at default. So TazFX. Yeah, it's a pretty decent one. You should think about opening your own Discord one day. Oh, bro, thanks for the kind words. I mean, I'm just a guy like you guys, man. Like, just a normal dude. But I appreciate that, Finest. I appreciate that. I honestly, you know what? I studied ICT primarily through Matt a couple years ago when I first found him, and I was learning about the unicorn. I was trading something similar. If you already know the story, then you already know the story. I apologize, but I learned the foundation of the things I know with ICT because of him. The way he was able to articulate the message, his maturity, it just really, connected with me. And then I found out that he was like not even 30 years old at that time. And I was like, oh my God, you sound like you're like a 40-year-old man, but you're like under 30 years old. And, here I am in my 40s. And I thought that was kind of funny. So I was looking for maturity, and sure enough, he's not anywhere near my age bracket, but he was very mature on the charts. And it just goes to show, like age doesn't mean anything when it comes to trading, right? Age really doesn't mean much when it comes to a lot of things. It just depends on the individual and how they hold themselves to a specific standard per se. Matt, to me, I've learned so much from this guy, and he's I got plus 10 years over him, and I've learned so much because of him. So a lot of this it relates to the idea of, would I ever start my own Discord? I'm just honestly, I'm very grateful to him and to Nate, and I never anticipated having an opportunity to share ideas like this and jump on live streams. Matt, aka is Ash Trades. That's his real name. Sorry. So Ash Trades is Matt. It's reminding me of Ace Ventura, minus the minus all the other stuff. But Einhorn is Finkel, Finkel is Einhorn. If anyone knows Ace Ventura, you know what I'm talking about. One of the funniest movies you'll ever see. But Matt is Ash Trades, and Ash Trades is Matt. Groovy Gene, what's up? Oh, bro, God bless, man. God bless. Thanks for doing lives like these. Oh, man, I really appreciate your support. The night action guy on Netflix. Oh my God, 100% Finest. 100%. I think I've actually said that to him when I first watched The Night Agent on Netflix, season 1. Amazing season, by the way. I haven't watched season 2. Season 1 was amazing. But yeah, he looks exactly like that dude, sitting by the phone, waiting to pick it up. That's so funny you said that. But yeah, once again, Groovy Gene, I really appreciate the comment there, man. Wow. That means a lot, honestly. Yes, heart racing, 100%, man. That was wild. Honestly, you guys got to go check that out. Holy crap, that was amazing. Okay, I just want to come back to the chart for a sec. Look at the reaction from this silly, super small looking FEG. This one little wick has caused all of this chop. And this is the definition of non-singular. This is exactly why. Now, I'm not saying this might not work or whatever, but this is what I'm telling you why I have the word singular on here, because it's like stuff like this I don't want to be involved with, because you just never know what a single FEG below your entry will do. And like I said, I don't know what price is going to do here, but this is where I would then move to the 2 minute, right? Because if I move to the 2 minute now, this thing hasn't confirmed yet. So I would just sit here and wait to see what happens next. So I'm going to hop on the 2 minute. I mean, I could even hop to the 3 minute, right? 51 seconds. This thing's already confirmed up here. But I already know that the 1 minute and the 2 minute have FEGs here. So like you got to use some logic here, right? You got to use logic in understanding the probabilities that are there, because your targets are still way down here anyways. So you might as well play it as safe as possible. So if I look at it from this perspective on the 2 minute, I can now say that the singular checkbox should be clicked off because it is singular. So now I do have technically an A+ setup in the works. The only thing I would say about shorting, however, from here is look at the distance from the daily EQ where we're located. This would be another huge red flag to me with evals versus funded. Like, I would not risk this on a funded, because when you're trading off of the daily EQ, like I showed you with that previous trade, you want the trade to be as close to the daily EQ as possible. And you want to take TP at the bottom of that range, if not the median of the range. This setup is happening literally at the median of the range, right? So like the move's already done, potentially. And if I go to the 2 minute, let's go back to the 3 minute. While this could still work, like I said, it's on a funded play, I would skip it. There's a lot of great things happening here, but one of the bigger flags is that the trade is happening too far away inside of the discount, right? Remember, I look at the daily EQ as a line in the sand for bias. If price is below, I typically want a long. If price is above, I want to typically short. Look at where we are. I don't want to be shorting this deep into discount, right? T4K, appreciate you, man. Peace out. Groovy Gene says, so what were the takeaways from today? I missed like an hour worth of this live. Oh my God. Too many things to talk about. I don't even know. Sometimes, like, you know, I'll write notes about some things to talk about, and then I'll hop on the chart and start kind of just freestyling all this with you guys. Not like a script. And I just share what I see. It's kind of hard for me to go back and talk about all the things that I talked about, because I don't have like a checklist of things, much like my checklist on the indicator here. But we did talk about Unicorn University. I showed how, you know, I am sharing a lot more in the NQ thread there, which is where I do a lot of my posting now. I talked about the data candle setup, which is a strategy you can use when the data candle is printing with good amount of volatility. So examples would be trading a data play with CPI, with NFP. Today was PPI. PPI is a great candidate for this. They don't happen all the time, right? But we know they happen a few times in a month. We can capitalize on those things, especially if you're trading on the lower time frame with an IFEG model. Works perfectly. How did you populate the checklist, the text content? Well, if you just open up the checklist right here, you can just start typing in whatever you want, right? So if I just say Steve, or actually, if anyone knows Minecraft, I am Steve. There you go. I'm Steve. No problem, brother. So once again, just coming back to this, daily EQs here. We're well into discount. This is a very risky type of trade to take. If you do take something like this, usually what happens is it's like known as a continuation setup, right? So that is not something I do. I'm not. I feel like anytime I've tried to take a continuation setup, it goes the wrong way. So I'm clearly not understanding when to take a continuation setup. So I've stopped doing that altogether. But this would be a great example of a continuation play to a certain extent, only because of how far we are into discount. If anything, I should be looking for longs here, not shorts, right? So keep that in mind. Daily Q, super important. And if I go back to the 1 minute, we can observe that that FVG that has been plaguing this entire setup this whole time. Look at it right here. This is a non-singular setup. And the problem with the setup too like this is if I were to have taken this, my stop loss probably would have been way up here, which then means if I know this is a liquidity level, like that's 13 points, right? Like I want to get at least 25 points or so, right? Like I want to get at least over 0.5 R if I was trying to skim. My goal is obviously 1 R, so like this is way too far away. And now price is hovering into drawdown, right? So, these are some of the things I've come across while I've been learning how to trade IFEGs and while I've been studying IFEGs in real time. Is like really understanding this daily EQ. This to me has been one of the most amazing additions that I've added to my chart. And it's free right here. No duplicates, interval, range, and EQ. Highly recommend this, man. Honestly. If I open it up, no duplicates, interval, range, and EQ. This is what it looks like when you pull it out of the box, but it's done by this guy. Rumpy Pumpy Dumpy. Nice name, bro. But it says he's a wizard, so you gotta trust the wizard with the name of Rumpy Pumpy Dumpy. But it's a brilliant indicator. Really, the mechanism is not even that complicated. If I open it up, you'll see, like, aesthetic-wise, it's all here. But if you look at the levels, it's just like yearly levels, pre-yearly levels, quarterly levels, previously quarterly levels, monthly levels, previously monthly levels, weekly levels, daily levels, Monday levels. I used to learn about, I started learning about Monday high, Monday low with crypto, actually. But I could never find some consistency with it. But I know that this is a thing for some people. But you can see all the different types of levels. H4 levels, like highs and lows. I wonder if I were to put... let's not put the open. Let's put the high here. It does list the highs. Oh, perfect. Interesting. But for me, I just have the daily EQ on. That's it. That's all I have. And this is a dynamic level that changes as highs and lows are printed within, like new highs and new lows are printed within the session. At some point, of course, the levels are kind of put in concrete in a way for the session, and then that level stands still, right? All right, well, this thing has finally started to make some sort of a decision as to the direction it wants to go. And it is going lower. So let's just go back to that 3-minute setup, because I did say I like the 3-minute setup the best. Only because it was singular. We do have the higher time frame IRL. There was no SMT, but it did give us the highest score if you think about it. We know that this was here, so it was a hiccup. I think I actually said the 2-minute setup would be the most ideal. But the reason why the 2-minute is now not valid is because of all this chop. This is showing us that we do not have strong momentum confirming the IFEG, right? Look at all these candles, right? Like that's not good. So if we go to the 3-minute though, like that's much more clear, right? And look at the way these wicks are reacting to the IFEG itself. So 3-minute looks like the best setup. It is a continuation play, and like I said, I'm not been very good with continuation plays. And a setup like this, if I were to ever try to take it unfunded, I would love for it to be closer to the daily EQ, somewhere in this range, so that I could be taking TP here, right? Not stressing, because my stop loss would already be a break even. But nonetheless, still a play. Why is it a continuation play, you ask? Well, you didn't ask it, but in my head, I thought you asked that question. Look at the structure. We got a higher high. We have a lower high. And then we have some lower highs here, right? Now, granted, I know this high went higher than this, but, I'll still consider it a lower high just because of the structure, right? Because this broke the structure, and we have another lower high here compared to this. So any sort of bearish setups that are happening are continuation plays, because the true reversal of the start of the bearish market maker reversal, or the model itself, is way up here, right? Happened at lunchtime. So this is technically why it's considered a continuation play. If this setup had formed closer to here, it would still be, in the grand scheme of things, a continuation play. But for me, it would have looked more like a higher probability type of short to take, because I'm using it off this level, and that's the key, is to try to get the best position as possible, as furthest away from the liquidity or the drawn liquidity as possible, right? But this setup on the 3 minute, like I said, if I had to look at the 3 versus the 2 versus the 1, I think the 3 might look the best, if I were to choose. But remember, we did talk about the 2 minute. But the problem with this, once again, is all of this chop here. Even though this would be confirming what we would have looked at as that FVG, that IFVG, the series here. But look at all this. This is not showing us momentum, right? So you can't say this is A+ by any means. And then, of course, we talked about the 1 minute being non-singular. That's the big hang up here. And then if we go to the 3 minute, once again, this is showing us the most clear, but it doesn't mean it doesn't mean you got to take it. I'm just showing you the examples between the three of them. You could probably use that type of analysis within a more probable trading time, like New York AM, for example. And then once again, using that daily EQ, you want to try to trade it as close as possible to this, because now that price is going this way, we're too far into discount. So Groovy Gene says, do you think using the previous daily EQ along with the daily EQ can be beneficial, or do you prefer just having the daily EQ? My answer to that is less is more. I'm trading on the 1 minute time frame with real-time levels. Whatever happened yesterday, unless it's forming some sort of higher time frame, H1 or H4 level, is irrelevant to me. I mean, if I put it on the chart, like I'm sure there's probably some sort of correlation, perhaps. Let's put it on. Let's see. I'll make this a purple line. Where is it? Did I check it off? I thought I did. Previous daily low. Unless it's really, really far away. I don't know why it's not showing up. Oh, there it is. It's because it's way up here, guys. And this is kind of my whole point. I did just say this. I'm trading like live price action with what's happening like right now. Seeing where this is right now, you can see it has no bearing on what I would like to do down here, right? So for me, this is why I just use the daily EQ. It's, the thing I always find is we always keep trying. I say we because I've been guilty of this, but I've always tried to keep adding more to my chart to make it, how can I optimize this to make it better? How can I, maybe if I add this, it will increase my win rate. Honestly, all it's done is cause more problems for me. And I'm only speaking for myself, not for anyone else, but I just found it just caused way more problems for me. So for me, less is more. I showed you the reason why I don't use a previous daily EQ, because you could see where it was located. That's why. Steve, yeah, man, it will be posted. Once it's done, all I got to do is just take the file, slap it onto YouTube, and then create a video display picture or whatever, and then post it to YouTube, and it'll be available like literally today. Hey, no problem. So yeah, I hope that answers your question, Groovy Gene. You said sometimes you see it bounce off the previous daily EQ, and then you get confused on what I should be looking at. Yeah. Okay. So, you just said it, right? You get confused on what you're looking at. I think when price is just tagging higher time frame buy side or sell side liquidity, like That's all you need. Honestly, that's all you need. Like if you look at Matt's charts, he doesn't have anything on his chart at all. Like he just has liquidity levels. That's it. He's got nothing else. He doesn't even have things I have on my chart. Like it is completely clean. There's a reason for that. You know, I used to be one of those people that had like a billion things on my chart, and you know, you have RSI, you got MACD, you got, you know, 5 moving averages, you got, the VWAP going, you got, you know, volume profile. That's a lot of stuff to have on your chart. Honestly, that is a lot of stuff to have on your chart. And they all will contradict one another. So I found when I started learning the ICT stuff, is like, you can kind of like pick and choose specific types of criteria and put them together. And then it's like you've created like a combo, right? And that combo becomes a system. So like if you take some of the, you know, more notable influence type traders out there, like, you know, once again, I'll reference guys like Sniper, for example, because he trades that forever model, for example. And I'm sure there's a lot of other people that are doing something similar, but, you know, he's taken the concepts of higher time frame FEGs. And I don't know if this is something he made. I have no idea. He's the only trader I know that, he's the first trader I found that was doing this. So that's why I'm referencing him. But, you know, he's taking higher time frame FEGs and he's using a lower time frame confluence to that. And then he's looking for SMT inside of those higher time frame FEGs. And then he's trading off of an order block. So you can see how certain concepts are just kind of being added to, like, as a combo. And kind of packaged into something. I think it's kind of brilliant, to be honest with you, the way people have been able to do that. It's worked for a lot of people. For me, I think it's been a little bit more simplistic of just understanding which higher time frame levels to work with. Because, you know, just like most people, I was using, you know, daily, hourly, 5 minute, and then I was using 4 hour, 50 minute, 1 minute, right? Like you're using these types of exclusive levels. And when I started to go back to the IFEG during Christmas time before the New Year, where I literally was like, you know, I literally went back to a clean, like the clean board, right? Like I just started from scratch again because I was just so upset with, I was just upset with my results that I had with some other stuff, like with the model I was trading, even though it looked like it was doing pretty good. I just realized it's not doing very good and I need to change and it's too stressful. So I went back to, you know, core concepts about, you know, thinking about trading personality, thinking about trading IQ. So my trading IQ, of course, if you're, you know, I show up to the market every single day. I'm studying, I'm learning. It's been like a couple years. Trading IQ is there. But I never really looked at my trading personality. So when I looked at my trading personality, I knew that if I thought about like what are things that are non-negotiable for me, like one of those things was, am I a continuation trader or am I a reversal trader, right? Because if I'm a reversal trader, I want to be trading inside of like what's known as that C2 candle, for example, right? Whereas if I'm a continuation trader, I'm probably going to be looking for that expansion, right? The C3. I knew I'm a reversal trader just based off of my experience and just my personality already. Like I like to be, you know, kind of catching right where that reversal happens. Like that's my bread and butter. So I knew right away, okay, I'm trading reversals. So then it was like, well, reversals form off of what levels, right? What levels do reversals happen on? Well, guess what? They happen on higher time frame buy side or sell side liquidity levels. What are the most common or most notable levels when you're trading on the 1 minute time frame? 50 minute, 1 hour, and 4 hour. And then what I started learning beyond that was that, hey, there's something called London high. There's something called, you know, Asia low, Asia high, overnight session highs and lows. Rest in peace, Tyler. I'm not sure if you guys remember who he was, but I kind of learned this through him. On Twitter, he would share often that you would see a manipulation form sweeping, you know, one level, and he would look for those overnight session highs and lows as a draw on liquidity. Typically, the Asia high or the Asia low would be, or like it could be London too. But I learned that from him. Like I said, rest in peace. He did pass away last year. And if you don't know who he is, he had actually worked with Matt, aka Ash Trades, to create a unicorn PDF years ago, and believe it or not, that was the first PDF I found that kind of pointed me in the direction of Matt back then. But he was known back then not as Ash Trades, he was known as Ash Ketchum because he was into Pokemon. So I thought it was kind of interesting because I was like, he didn't spell, like, it wasn't like Ash Catch M, like CATCHEM. It was like KETCHU. I was like, Pokemon? I was like, this guy sounds like he's 40. He's a 40-year-old into Pokemon? Like, what the hell's going on here? But yeah, then I found out, of course, he's not 40. He was like 28 at the time. So, but yeah, that was a Pokemon reference. And I think then, you know, as things started to get a little bit more, I think people started, I dare use the word demand, but like people started to ask him more and more questions. He had his own Discord that he decided to probably, you know, go a more professional route and change it to Ash Trades. So nonetheless, that was the PDF both those guys formed. But I had learned about overnight session highs and lows because of Tyler. And I learned the unicorn and majority of my ICT concept teachings because of Matt. Yeah, you know, another great IFEG trader is also in our community. He doesn't really talk much, but you probably heard of him. His name is Eat More Chicken. He's got a funny name, I know, but he is a Chick-fil-A manager, or I don't know if he owns his own store, but man, that dude is probably the greatest IFEG trader I've ever seen in my life. And he's so quiet, you would never know. But he is with us. He's in Unicorn University. He was actually aka a scholar or analyst before, like, when I joined. So I learned a lot through him too. But he wasn't trading IFEGs back then. He was trading unicorns and other things. But then when he started trading the IFEGs, it was primarily because this indicator came out, and it was because of Dodgy. So if anybody knows about Dodgy is a very well-known IFEG trader. And this 2 degrees indicator was a collab with him. They've since parted ways, but nonetheless, that's where the IFEGs kind of came in. But I've watched Eat More Chicken go crazy. Like, this dude is, and he's very open with the things he does, and in terms of like how much money he's making, and it's, I mean, it can cause people FOMO, I'm not gonna lie, but like, he is, geez, like, I've seen him crush $100,000 a day, you know, across like 30 accounts or whatever, but like, he's just sniping. And truth be told, that was a big reason back in December why I went back to IFEGs, because of him. I knew, like I said, I was a reversal trader. I knew I wanted to, you know, look for those liquidity sweeps. And I was like, well, what entry model can I use that will get me in and out of a trade as fast as possible? And like, you know, when I refer back to people that I looked up to, Eat More Chicken was one of them. And I was like, okay, IFEGs, like, let's go. Yes, Ollis, he is a market maker, man, 100%. That dude is crazy. But big shout out to EMC, man. He's honestly, he's helped me in so many different ways. Just learning more about IFEGs and how to better trade them. He does take riskier trades than me. They look riskier to me, but man, that guy somehow makes it work. I don't know, the way he picks them. So yeah, big shout out to him. And, you know, big shout out to all of you. I appreciate you guys all sticking around still. You know, been going on for almost an hour, 45 minutes here, but we've just been watching paint dry here. You can see this thing has actually dropped now and tagged what's looked at as like a target level, like what's known as an opposing swing. If we were to just measure this from here, let's just say our stop loss, like this stop loss here, 52 points, seems unreasonable to me. I probably would have used something more like this. But if we look at it, this tags 1-to-1 right here. So this is a 1-to-1 trade once again. And it's another example of the hit rate on a 1-to-1. I've showed you multiple 1-to-1 trades with logic and showed you them working. And I showed you that the 3-minute is probably the cleanest of the 1 minute, 2 minute, 3 minute setups. But I mean, this happened right in front of us, right? So good tape read, good. I think there was some good things to talk about with this that stuck out for me. I hope, you know, you guys picked up something there. And, you you just understand a little bit more about maybe how I trade and things I'm looking for. And aside from that, I know we did not talk about the IB, so let's do that, okay? And then we will end the conversation. So to start, let's work on what happened today. So we'll shift gears here. In terms of the IB, this is a pretty interesting model that has been shared by Matt, and Mr. Zink has been the guy that has come into the community, I guess, to really talk on it. He does trade it a bit differently, I think, than Matt first, the way he shared it with us. But what I want to show you is I'm trading this on NAS 100. You'll notice it's not on NQ. The reason is that I'm trading this as like a secondary type of model, not on my futures accounts. I'm keeping my future stuff separate. I have a CFD prop firm with the fivers, typically driven for FX. So I have been trading like Euro, for example, on there on the higher time frame. So it was like meant to just be like a swing trading type of account. But I've started to now like trade these types of setups on there. So that's why I'm using NAS 100. You'll also notice that I also have SP 500 here too, right? So these are some of the pairs I've just been looking at. But let's look at NQ. So today NQ at 9:30 forms the low, and then at 10 a.m. we get the high. So I was literally marking this down, and before this had set up, I was waiting for a price to maybe retrace lower, looking for a front run for about like 10:15. I said this yesterday that typically if that range can get set by about 10 a.m. and it's like a decent size, so if we measure how big this was a 210 point move. Like that's a pretty decent range on NQ. You can start looking for that EQ tag maybe before 10:30. But then at 10:15 to 10:30, it went a little bit higher. And the problem with this trade is that on the next candlestick, the 10:30 to 10:45 candlestick, we get price breaking through the IB high. So that means the setup is invalidated, because what we want is price to tag the EQ first of the IB range and then move to our opposing swing, right? And in this case, it happened before. So this would be an example of an invalid trade. I believe did ES do the same thing? I could have sworn it was different, but yeah, it was different, and I'll show you why. So this is a better example of what I wanted NQ to do. So 9:30, let me turn on this highlight. So 9:30, we get the low. 10 o'clock, we get the high. Once that range is set, we can start looking for, and this is a 38 point range. That's pretty good for ES. Then we can start looking for that entry to happen around that 10:15 time frame. And what we end up getting is a front run. Now, the thing with this is you're looking at this on the 50-minute, right? Let's just zoom out. Let's just actually rewind this. The way I like to set the framework to this is the way I've been doing it, and I've kind of learned it from Mr. Zink, is obviously I'll set the range on the 50-minute because it's just easier to see, right? So it'll be something like this. And what I'll do is I'll take the indicator off. You'll notice I'm using Fibonacci. I should have probably just done this. Okay, there we go. So, that's why I did that. Let me put that back on. So I have the 0%, 100%, and 50%, right? And then I also wrote the word or the letters IB here, just for shits and giggles. But what I'll do then is I'll start moving to the lower time frame. Okay, so why am I moving to a lower time frame? Because when you're looking at like your entries, so like we're gonna place like a limit entry here, for example, right? So 6850.2, right? So something like this, and then our stop loss would be at the low, and then we're targeting the high, right? So this is the way our position tool is set. Now you'll notice when price is retracing, the problem with limit entries is that you never know if you're gonna get tagged or not. When I used to trade unicorns, this used to plague me nonstop, waiting for like the breaker block to get tagged. And then, guess what happens? You get front run by guess how many cents? The same thing that happened here, right? This thing, what did it hit? Let's see. So we know the level is 6850.2 cents. This was 6850.22 cents. So 20 cent front run on SP 500. Okay, 20-cent front run. And the other thing, which is a big problem with CFD, is sometimes the way you get filled, right? There's slippage issues and things like that, right? With the asks and the bids and stuff like that. So that can also cause a problem if you're trading CFDs, which I've learned. But what I want to share is go to a lower time frame, right? We went to the 5 minute, go to the 3 minute, go to the 2 minute, go to the 1 minute, go to a lower time frame, because the reason you'll do this is that you can get a much clearer view of what's happening in terms of whether your limit entry is going to get tagged or not. Because if you look at what's happening here, you would have seen prices dipping lower, 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 and then gets bought back up. So what does that tell you? That tells you you're either getting front run or the next candle is going to tag you. So how do you trade something like this? Well, instead of just waiting, part of being a trader, in my opinion, is being able to react to shitty situations. What is a shitty situation? Being front run. So I know we can hold our discipline and say, I'm going to just wait for the level to get tagged because that's what I do. But I would ask you to just use some logic here. Go to a lower time frame, observe what's happening on the lower time frame, and start dollar cost averaging into your entry. Okay, so if I see this candle close like this, and then the next candlestick, we don't know what it's doing, right? Like we don't know if it's going to go higher or if it's going to go lower. What you can do is just take a buy right here, right? Maybe because it's so close to this level, what you could do is either go all in right here and front run this, or you can maybe go in with like 80% of your position, and the rest of your position can be added below this, right? In the event this does dip lower, now you can get a lower entry. This lowers your DCA, right? And it gets you closer to where that IB level is. This is what I do. And this is what I highly recommend you do. Don't just wait for the price to give you what you know you want. You have to take it. That's the thing with trading, is like, we can't expect the market to do anything for us. To me, when you're setting limit entries and just waiting, it's like hope. Don't hope for that level to get hit. Take the control back into your own hands. Use, the concepts we know. Understand momentum and what candles look like with momentum. Understand trading system, dynamic, risk management logic. Like I just showed you, you can always dollar cost average into position. How you determine your risk of like, do I go 50% in, 70? That's up to you. You're going to have to figure that part out. But if I'm looking at this setup right here on ES, and this is what's happening, I'm definitely going like 80% to 90% in right here, if I see the way this candle closed in front run. And if it goes lower, I'll see if this thing dips even lower, and then I'll enter with the remaining 10 or 20% of my trade. Hopefully this comes down a bit lower. Okay, what does that do for my trade now? Okay, so let's just see what happens. So let's just say this was my entry, right? My stop loss is at the bottom here, right? Now, of course, if I put it up here, it's now showing me 0.83, right? So guess what? Move this higher. Get your 1-to-1. If you really want, if that's what you really want, just move it up. Or be happy if this thing goes up here that you get your 0.83. But if you've dollar cost average, then this is still going to hit you most likely for 0.9 or higher. And I mean, at that point, are you really going to trouble yourself over, a few points, right? This was 17.4 points. This thing, if this was, 1R, this is just right under basically, 21. So 4 points. Are you really going to squabble over 4 points on a trade that took, let's see, how long did this take? This is 19 minutes and this is 27 minutes. Like, if you're in a trade for that long, just reward yourself. We saw Matt do this the other day. He rewarded himself. Pay yourself. Remember, you have to take control of the situation. Don't let the market take control of your situation and your trade. You have to be in control. It's fine for us to say we don't know what the market's going to do. That's right. We don't know what the market's going to do. But what we do know is going to happen is that you are going to push the button, which means you are in control about what's going to happen next. And this is why, once again, I would say go to the lower time frame once that range is set, observe what's happening on those candles. Because if you start seeing that you're getting front run and you know you've already done the work because you've been sitting at your computer for an hour, like, get in the trade. There's no reason to wait. Get in the trade. And if it goes lower, that's because, like, if it goes lower, then that's why you dollar cost averaged into that entry. Because you don't know what price is going to do, but you do have control over how you're going to react to what price does, because you already know how you're going to trade that. So if you don't understand that, or if you're not, like, if it's not familiar to you, then, you know, the best thing to do is to practice. How do you practice? Go back through all the other IBs, go to the lower time frame and look at what price did on the lower time frame. That's what I would suggest. Okay? So this, to me, should not have been a missed trade, in my opinion. Like this is a huge missed opportunity. And, you know, it's not, there's no judgment here towards anyone. Like, I'm not judging Matt. I'm not judging anybody. I'm just telling you, like, if it was me and I missed it, I would just judge myself. And I would say, because, like, when I look at trades that screw up, I always look to see, like, where was my mistake? If I have a win, I always look to see, like, what could I have done better? Because it's never going to be perfect. So it's like, what could I have done better? And I remember what I see, right? Remember what you see on the chart, because while the chart may not repeat, it rhymes. And this is something that we used to see in crypto a lot, is that the market doesn't repeat, it rhymes. So look for the rhyming patterns. Look for those rhymes. Alice says, I always blame myself for being over strict with my rules. I miss a lot of chances. You know, at some point, I would only say, and I don't know if this is the case for you, but, like, if you have too many rules, that can be a problem and keep you out of trades. If you're being overly strict with rules, I would say, like, reduce, or let me rephrase this. Figure out on your rule list or your checklist what are mandatory and what are not mandatory, right? Something like market order versus a limit order, in my opinion, should not be a mandatory thing. You should be fluent. But I think for me personally, I like when I trade IBs, the way I've been doing it, I start off with a limit order and then I observe on the lower time frame what happens next. Because if this happens, I'm canceling my limit order and I'm jumping in with a market order and I'm dollar cost averaging into my position just in case. So I'll go in heavy here and then I'll enter the remaining contracts here if price goes there. But if it doesn't, that's fine. Right? My goal is still the same. I want price to go here in this area and I want it to go here. That's what happened on ES. So that's some analysis and some strategy that I've been thinking about lately with IBs. That was what we saw on the SP. One other thing to talk about, which was yesterday's Asia session setup. This was hilarious. My goodness, this was hilarious. So I did say yesterday I was going to show up and take a look at what was happening there, just because of the stats. Here, where are we? 7. Is it here? So this is Thursday at 8. There we go. Let's turn this off. So we talked about the Globex range, which is like, I think we said it was like 6 to 7, and then the Asia range, IB range was like 7 to 8, right? And I was saying how, like, I started backtesting January and February, and then was like, man, of course nothing's perfect, but the 7 p.m. to 8 p.m. range was more profitable than the 6 to 7 p.m. range. So I was observing what was happening yesterday with that. So we're on the 50-minute time frame. Here's 6 o'clock. And then this is the 7 o'clock low. Or sorry, this is the 7 o'clock candle that ends, which means this is the high, right? So if you were to have taken this setup Let's go down to the lower time frame. Let's just see what happens. So if you have a limit order set right here, well, you get tagged in right here at 636, right? Remember, the range is already put into place. I would also say, you want to make sure the range is a pretty decent size, right? Now, what's a decent size? Well, we talk about data candles, right? We want it to be like over 50 to 60 points. This is 80 points. That's a pretty damn good range. When you start getting to 20, 30 point ranges, I would stay away. It's not worth it. Wait for those bigger ranges. But if we go to lower time frame, there's no front running here, right? Because there's no wicks that just miss it, right? Like we saw with that ES setup, or sorry, S&P 500 setup, same thing. This candle tags it 100%. Then you get a move up. Then you get some more downplay. Then the price goes here. Now, two things about this setup, okay? If you're playing the 6 to 7 setup, when price gets here, I know Mr. Zink has said he usually will put his stop loss to break even when price is pretty much, in the above 50% range. He'll put his stop loss to break even. So this would have been technically, if you're using that 6 to 7 range, this would have been a break even trade. Or you just take your profits here and be done with the day, right? I think Matt would be more inclined to just saying, hey, I'm done. I'm good. I'll just take my profits here. I'm happy. Okay. Let's see what happens next. Because I think this does end up hitting full TP. But the problem, I forgot to mention, is this. I say it's going to hit full TP, but look at what happened here. It did wick here. So if you did have a hard stop loss, you got stopped out right here. Okay, be mindful of that too. Another way you can combat this is go to a lower time frame and say, instead of having a hard stop loss, I'll wait for one candle to close below on, say, the 1 minute, 2 minute, or whatever time frame, right? So let's go to, you could even say on the 5 minute time frame. If I see one 5 minute candle close below here, I will close my trade. I'm not saying it's a good idea. I'm just saying it's if I was thinking about it logically, like what's a way to combat being wicked out, that would be the way. Go to a slightly higher time frame. I would probably say the 3 minute, just because the candles are a little bit bigger, but you're not waiting that extra 2 minutes, because that extra 2 minutes could kill you. But going with 3 minutes, you could still get out, and you'll know if this thing's closing below, right? When you look at this candlestick, this is a straight up wick that goes down and goes back up. You would still be in this position, right? And then if you're still in that position, you get rewarded right here. Boom. Now, it didn't actually tag it there, but I'm sure you probably would have taken your TP there, right? But if you were going to wait it out, when does it happen? Right there. Okay. So if you were really waiting for that extra little point, which I hope you don't do, it would have happened at just after midnight. So you would have had to wait an additional 2 hours just to stroke that ego for an extra 0.5. This is kind of my point. Like, don't get greedy. You've been stuck in a trade for that long. Get the hell out. Take your profit. Be grateful for what you got. Okay, so that was the 6 to 7 p.m. range. It actually kind of worked out if you negate this part. If we look at that other range, which is the Asia range, so I was looking at the Asia range. So that starts at 7 to 8, right? So let's go to the 15-minute. And let's set that range. So that would be starting here, 7, right? So we have a low, then we have a high. So the high is set, and then price dips a little bit lower here, and then it dips a little bit lower here, right? So in this situation, you're looking for shorts, right? Now, this range is about 67.87 points. So that's a really good range, size-wise. Now, keep in mind, that one is hard because of volume that comes in at 8 p.m. Yeah, I'm for me, this is fairly new. I'm observing it and trying to understand the way the volume comes in. I have traded IFVGs at Asia Open, which is 6 p.m. I know it says Globex is 6, but I've just considered Asia Open at 6. And I've found amazing IFVG setups that form between 6 and 8 p.m. Like I'm just blown away sometimes at how good they are. But it's not worth it for me to trade that, so I stay away. Let's go to the lower time frame and observe what's happening here, because there's two things. The first thing is we have the high that's set. That's great. Then the low gets set here. Here's 744. This is 745. So on the next candlestick, it actually forms the actual low. So if you were looking at this on the lower time frame, you would just do this, right? And what happens next? Well, your entry would go here. You would get tagged in for the short because the high printed first, the low printed second. So you're looking for IBEQ to IB low. However, in this trade, which we were discussing yesterday in the Gen chat, man, this thing, I said to everybody that if you wanted to have a lesson in emotional trade management, this would be the trade, because this thing whipsawed back and forth like crazy. You get your entry, you look like you're going to stop loss here at 815, then you're like, oh shit, this thing actually might go and actually work because it looks like it's going to turn the other way. I mean, look at the way this candlestick formed. Like, that's a beautiful candlestick to form at a SIBI. Perfect SIBI right here. Like, beautiful. So now, this is what I did. I just set this level and I was like, this is the level. If this level gets broken, like, the trade's done. Because look at how many times this thing got tagged. This is a 5-minute SIBI. So price goes all the way down, comes back up, rejection, then you get another beautiful reversal like candlestick, right? Similar to this one. I thought when I saw this, I was like, okay, here's the last chance. Like, this is it. And then I saw this candle form. Now, the funny thing with this candlestick is that this candlestick started off looking like this candlestick here, like a bearish engulfing candlestick. And then at the last second, I think this thing just immediately got bought back up. And when I saw that wick, I was like, oh no, this trade is done. And then sure enough, price aggressively closes above that SIBI with a bullish engulfing candlestick, flips it into support. Look at this candlestick wick. It's showing you the buying pressure, right? And look at where the EQ is. I talk about EQs a lot with ranges, right? Look at this EQ being supported beautifully. Beautiful candle closures supporting this thing. And then, of course, there's your follow through. Stop loss. So, really good example of if you wanted to understand or build your trading emotional, your emotional capacity, this would have been a perfect trade to sit through, because I sat through it with my phone. I was busy doing other things, but I had my phone on me and I was just watching it, and I was just like, I had alerts set, but I was just watching this level and I was like, oh my God, you got to be kidding me. Why is this thing not working? The other thing too is look at this level here. We have a busy right here. And this level looks like it's going to be broken through with this candlestick, and then it's like, psych. So this is just a great lesson on starting with the higher time frame, moving to the lower time frame, right? Start on the 15 and then start moving into like the 1 minute, 2 minute type time frames. And then once you're there and you're in your position, move to the 5 minute. Because if you're just looking at the 1 minute, it's just the way price moves. It can give you it might cause unnecessary FOMO and panic is what I'm trying to say. So that's why I would say move to the 5 minute and let those candlesticks play out, because a 5 minute candlestick is going to tell you like more of a story than a 1 minute or 2 minute candle will, especially when you're trading off of a 50-minute range, right? So that's what I would do. That's what I'm currently doing. The next one will be on, I guess, I don't even know. Would Mr. Zink trade on a Sunday night open? I have no idea. But I'll be back at Sunday taking a look, right? You think adding an EMA to IB is a good idea? I don't know, man. I have no idea. Which EMA would you use? Like a 20? 21, 20? the thing with the setup is it's so simple, right? Which level gets formed first, high or low? Play the EQ to the opposing side. I mean, does it need to be more complicated? Okay, so 9/21/50. Yeah, I mean, but like, how would you gauge that? Because, I mean, look at the way this all played out, right? Like, if you wanted to enter here, you'd be like, this is a perfect trade. Like, look at it. It's below the 20 EMA. You're getting a beautiful rejection candle here, and then mind games. Like, I don't know how the 20 or any other type of EMA would help you in this situation like this, except with showing you that maybe right here the trend is flipping and maybe you get out early. But I mean, using market structure can tell you the same thing, right? And remember I told you I gave up using diagonal trend lines for horizontal trend lines? Well, this is no different. This FVG here, this SIBI is no different than a horizontal line, right? But look at that horizontal line. It tells you a lot about what's happening. So what do I mean by this? Well, this could be an indication where you could get out of the trade early before your stop loss gets hit. And why would you do that? Well, if you know this is the line in the sand and you know this is the EQ, what you're looking for then is for price to sweep this, right? You'd be looking for price to do like something, wrong one. Let's go to here. You'd be looking for price to sweep this and do something like this, right? On the lower time frame. But because price does this and doesn't reclaim it, you would have been exited around here, right? Probably on this candlestick. So you would have avoided some of the I guess the major parts of this loss. It could be a good way to exit, because if price does then do one of these and actually, let's say it faked you out and it goes back lower, what you could do then is just, add to your position here, and then take profit earlier and not just wait for this, right? Just to recoup a bit of that loss. I mean, so many different possibilities out there, right? Tracy says you just have to let it play out and the probabilities will put you in profit over time. And we have seen that happen. I know all of us had done some back testing in 2025 and showed like some pretty, pretty bad results. Like I think it was like 20% win rate. So, I mean, it's good to know that, because you need to understand like how many losses can potentially rack up in a row. Now, keep in mind, trading an Asia session is not the same as trading the New York session. And I'm sure those stats will change. I'm sure there's going to be variance. So, anyone have any other questions? I think we're going to end it there. I've been going on for over 2 hours. I guess you can tell I'm passionate about the charts. But yeah, I really appreciate everybody being here still with me. Anyone that was, listening to this, appreciate you as well. If you're on the if you're listening to a replay, I appreciate you listening to the replay and taking time. Yeah. Thanks, Alice. God bless you too, Groovy Gene. Thank you. Thanks, Tracy. Yeah, enjoy the weekend, everybody. All right, enjoy that weekend. I'll be back actually for a live stream on Monday. It's usually my schedule. I usually go like Thursday, Friday, Monday, Tuesday, and then I'm off. Take a nice big break, and then come back and do it all over again. So I'll be back on Monday for the PM session. Yeah, we'll see what the PM session has. You know what I'm going to do on the PM session is I might just do I might get an eval going and just live trade the PM session, and we can do something like that, because I know someone was saying, hey, do you live trade? So maybe I'll do that. Yeah, but until then, peace out, everybody. God bless you, and thank you for your time.